Good day, everyone, and welcome to the weekly outlook for September 9th, 2013. I hope you had a wonderful weekend, and today I'm going to focus mostly on the technical levels that you should look at for the week ahead. Fundamentally, there's not much data outside of Syria till Thursday, so I think Syria will be the main focus till that time. However, Syria is not necessarily that bad for the US stock market because the Feds are less likely to cut the stimuli or slow it down substantially if Syria is looming over our heads. This taken into account with the negative employment numbers we saw Friday could also cause the Feds to leave the stimuli in place or cut by a negligible amount over the next several months. Either way, negative news is driving the stock market higher, and we have to be mindful of that right now. The first technical item I want to discuss is the momentum, and you can see that the percentage of advancing issues compared to declining issues is reasonably even. This shows me that buying and selling pressure is not one-sided, which also tells me that markets are fairly mixed right now. The other indicator, on the other hand, the one below, that shows how many stocks are making highs versus lows, is showing us that there's a strong bias to the upside compared to the downside. Overall, we can tell by looking at these numbers that market internals are slightly biased to the upside right now. I'm actually surprised by the internals right now because, as I said last week, if you were to look at the Nasdaq, you wouldn't think for a minute we were weeks or days away from war. We can thank the Feds and their infusion into the market because without them, these numbers wouldn't look anything like they look right now. Technically, the broad market is still bearish. We have a bearish flag formation and we're still trading below the 50-day moving average. With the market internals looking balanced and no news coming out till the end of the week, I'm expecting a range-bound trading action, probably continuing the flag formation more or less. Watch for a range between the low 1640s and the high 1660s. The Russell 2000, which tracks the small cap stocks, also has a bearish formation, but it's not a flag but instead a triangle formation. These don't have the steep slope of the flag and have less volatility and trading range. Right now, the support level is around the 101 area, and the resistance looks like it's getting shorter every day. Anticipate less trading range going into the week and increase in volatility towards the end of the week. We probably will break out of the triangle by that time, but a lot depends on the Syria and the Feds for now. The technology sector is clearly the strongest right now. The tech stocks are not impacted by Syria and interest rates as much as the broad market because tech stocks are indirectly affected by these events, while the stocks that make up the broad market, such as banking stocks and business stocks, are directly impacted by Syria and interest rates. But remember, without the broad market, Nasdaq isn't going very far up. So the fact that we're seeing strength in this sector can help the broad market, but the broad market is the one that's going to decide where Nasdaq ultimately goes next. This is very important and you need to understand that fact. Therefore, I'm expecting more range-bound action with the upper resistance near where we're at right now, or maybe just a bit higher. The support area is hard to peg right now, but I would keep my eye around the 3600 level. If we begin violating the 50-day moving average, and we will if the broad market tanks, we will have a problem on our hand. But for now, everything is quiet and expect more range-bound action for the first half of the week. The next market is the bond market. We've analyzed this market to death last week, and so far our analysis has been very accurate, especially about the range we are seeing. Right now, due to the negative job report and Syria looming over our heads, prices are going to be staying towards the upper part of the channel. However, the first sign of better economic data, which may come out as early as Thursday, we will begin sinking once again. This market is going lower, but we may have to be a bit more patient for now. Following this channel is a good idea for now. If you day trade, short rallies only. Don't trade this market to the upside because the trend is down. I'm looking at the 125 level on the September contract as the high for the next few days. And if you trade futures, it's time to roll over into the December contract. The next market I want to look at is the gold market. If the US economy continues improving, the price of gold will continue moving lower in the long run. However, we ran into a hiccup with Syria, and war means taking money out of investments like stocks and bonds and putting them into safer assets like gold. So we have to see how Syria develops. I'm still bearish overall, but I'm looking at the big picture. If you look at the micro view, we may continue to rally, especially if we attack Syria, but the gold market is pricing it in as well. Watch the 1440 level because if we attack, we may break above it late this week or beginning of the following week. Finally, let's take a look at the currency market. Right now, the US dollar is the market all eyes are on, and we're in a very mixed economic environment right now with the dollar. On one hand, we have Syria, which isn't good for the dollar, and on the other hand, the infusion of capital to buy bonds is going to end one way or another. These are the two forces the dollar is dealing with right now. On a technical level, we're seeing a 2-month divergence signal, which usually signals short-term reversals. There's no major fundamentals being released early in the week, and Syria is not bullish for the dollar. I'm expecting some downside unless we hear something new or unexpected in the next few days on a fundamental level. Expect a decline to the support area slightly below the 81 level. Most foreign currencies are watching the dollar very carefully right now, and we should see some buying into the foreign markets for the coming week ahead, especially if the dollar continues to weaken. There's a few setups for tomorrow. The first setup is a tail gap to the downside. The ticker symbol is CNI. Place a sell stop 15 cents below Friday's low, and if filled, place a buy stop 15 cents above Friday's high price. The second setup is a 4x4 to the downside. The ticker symbol is QGEN. Place a sell stop 10 cents below Friday's low, and if filled, place a buy stop 15 cents above Friday's high. Remember to cancel all orders if you're not filled by lunchtime, New York time, or Eastern time. That's it for the outlook for the coming week ahead. Have a great weekend and stay tuned for my midday update tomorrow.